Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, December 12th, 2007. And first off, I just want to talk a little bit about the overall market today. And we're just going to talk about what happened because there were some major things going on in this market. Number one, the Fed came out at 9 o'clock this morning with an announcement. The Fed basically said, we've combined with the European Central Bank, the Canadian Central Bank, the Asia, the Swiss, and a bunch of other countries' central banks to bring liquidity to the market through short-term loans. All right, now these loans are basically short-term, 35 days, I believe, of massive amounts of money available for some of these institutions and financial firms that they can borrow this money to keep the liquidity and keep the money flowing. Okay, now initially the market rallied huge on this, and we saw the futures spike upwards of 23 points, and this is the S&P futures, the ES December contract. We saw this spike up 23 points in a matter of a minute or two at 9 o'clock. After that happened, the market kind of settled into a slightly downward range. We kind of slowly came down, we bounced up, we came down, we bounced up. Come 2:15 in the afternoon, some major selling came into the market, and we saw the NASDAQ, which was up about 30 points at this point at 2:15, drop to negative 10 points on the day within a matter of 10 to 20 minutes. It was unbelievable sell volume coming in this market. There was huge volume in the market today, partly because of the Fed, partly because of the sell-off. About 2.8 million contracts traded. That's a very, very good volume, all right? Anything over 2 million is 2 million is about average, 1.9 to 2 million is average. Anything over 2 million is considered very good volume. 2.8 million, just tremendous volume. Now, I want to show you the charts here, folks, all right? And I've kind of done a little annotating here, and I'm just going to go here and show you guys what was going on. Early in the day, we're trading up the futures. The futures were up, by the way, before the announcement by the Fed, which leads me personally to believe that a little something or other leaked out. Something with news was going to come out by the Fed probably leaked out. The futures were trading up about 10 to 12 to 13 points early in the morning. Okay? Now, come 9 o'clock, look at this tremendous spike. It's not often you see a spike like this really in the markets. I will be honest with you. Very rarely this powerful of a move comes, and it did come today. Look at the volume in that candle when we spiked up. Just tremendous amount of volume here. And that was the Fed saying exactly what I said. They're going to try to help the liquidity crisis. Now, why they didn't announce this yesterday, I do not know. I really don't know, folks. And listening to Kramer on CNBC today at 2:45, and a couple other analysts, I happen to agree that the Fed has handled this pretty poorly overall. And overall, you got to take this for what it is, and it's not a great maneuver by the Fed. And I'm just switching this to 10-minute candlesticks because that's what we usually use. So let's look at this in this case here, folks. And what you can see here again is that massive spike up. Then you see really we kind of settle into a downward range here, and we kind of sold off down here. We bounced, yes, back to the 20 moving average, as you can see here. We bounced back here again to the 20 moving average, but come that 2:15, 2 o'clock period, we sold off hard. And look at this downward trend, just constant dumping, and look at the volume increase in these candles. All right, now something very interesting happened late in the day. We actually rallied back very strong. About 3:50, 3:45 in the afternoon Eastern time, so 10 to 15 minutes before the market closed, and you can really see these last two candles being the key to it right here. We saw a massive rally back, and you got to ask yourself what exactly was going on there, because it almost seems like the PPT, those of you that know what the plunge protection team is up to or has the ability to do, wonder if this wasn't a key here to kind of save the market, and I'll explain why. And let's go right into that right now, folks, all right? Now, why would they want to save this market? First of all, this rally in the end was very, very last minute, and you got to ask yourself what was going on. Number two, if you remember yesterday's video, and on the daily of the NASDAQ, I want to point something out. Yesterday, we talked about a couple things. Number one is, do we confirm the down move today? Remember, after you have a big spike down in a market, after you're in a small uptrend or a near-term uptrend, and that's what this was right here, all right, and then we had this big spike down yesterday, you look for confirmation. Those people that jump the gun usually get whipsawed out because a lot of times a big move down is followed by a big move up. Well, that's what it looked like today, what is happening. But then we started to sell off, and that was number one. So we wanted to look for confirmation. All right, so that would have been a break of this point right here. And this is key technical stuff, so try and keep pace with me, folks, because this stuff's very important to grasp. Number two, there was a gap right here that needed to be looked at. All right, you break this gap, you're going to hit the 20 moving average, which is the yellow line right here. So that's number two. And these are all stuff covered in yesterday's video, so feel free to go back and watch it again if you want to confirm it. All right, if we hit that point, we were basically going to close the gap, which is right here, and hit the 20 moving average. Now, if we hit the 20 moving average, the idea being is that you might close below and confirm a down move, and we might see another move down to this gap window. Okay, right there. And if we broke that gap window, then we look to fill the gap right here. Now, what's so crazy about this is that during this sell-off, we actually came down, breached the gap window right here. We filled the gap right here and hit the 20 moving average all in one. Now, that is support, absolutely. But just when you thought the market was going to close lower than yesterday's low and confirm the down move, and they were going to hit that 20 and maybe take it out, that's when the buying pressure came in. So it was almost like an outer force. And again, this is market. This is a market. So the markets can do anything. So again, take that for what it's worth, is that it probably was just some buy program that came in from some institutions. Who knows? But in any case, you saw this dramatic bounce off that 20 moving average on the daily. Closed us above. So again, we did not confirm the down move on the NASDAQ today. And you have to almost favor the upside now, believe it or not. I hate to say it, but unless we break this 20, now this 20 is the next spot. You don't want to look, or I should speak from my perspective. I always speak from my opinion, what I'm not looking to do. And I will not look to go short until we close below this 20 at this point. Because as of now, the market's been saved by forces that I cannot pick on or even talk about. Now, what was so interesting also on the ES futures and on the SPY, let's go to the SPY here and just do a little analysis as well. Okay, and I just threw in a couple moving averages there for us to keep track. Okay, and we have the 200, the 50, and the 20 in there, as we like to have for analysis purposes. And just want to point out here one thing on the side. Notice on this up move here, folks, and this is again key on the SPY. Look at that up move, and look at the volume. And this is what I always like to point out. All right, when you have descending volume on an increasing chart pattern, that's usually a bearish sign. Now, yet the last 2 days we had the big sell-off yesterday on the Fed, and then we had the big move down today. We actually closed positive in the markets, but just not by too much. And look at the volume increasing here in this area. So I just want to point that out. Now, looking on the SPY, if we had been up as far as we were and pushed up a little more, you would have had, if we closed up in this area, what's called a positive engulfing candle, which is a very bullish sign. However, when we failed that and pushed down, it looked very, very bearish as we took out the low here, came almost down to that 20 moving average. But the saving that took place there was, again, very unique and very strange, but nonetheless, it did not confirm a down move. So, as I said before, you got to kind of favor the upside. Now, one thing I want to show you on research is research in motion. We talked about this a lot in the chat room, and what I want to point out here, folks, is that intraday, we were trading on this sell-off down here. All right. The big thing on research in motion was that for the first time since probably over here, it closed below 100. And I kept on pointing to research in motion and saying, guys, this is a key level. $100, a close below 100 in confirmation on research in motion is a key level to watch. And I said at the point when it was trading at around $98 a share on the sell-off this afternoon, wow, could we actually confirm a down move here? Could we actually confirm 2 days in a row closing below 100? Sure enough, that buy program came in, and look at the buy pressure that came in here. All right, not only that, but the stock closed over 100, reversing that close, not confirming a down move, and you got to also again say, hey, what's going on here? Very, very interesting trading. All right, folks, these are just little things that as traders you begin to pick up on. And it looks like there's a concerted effort to keep these large cap techs in play to the upside and not let them break key levels, because I believe, and I've been saying this for a while, the QQQ is the big thing to follow. The QQQ breaks down, and this is the QQQ chart, and you can see it never really broke this level even when the rest of the market did, and I pointed this out on multiple charts. All right, but if the QQQ, and again, look at where the QQQ came down to, right here to the 20 moving average. If they can hold this up, and what's the main components of the QQQ? Google, research in motion, Apple, and so forth, okay? So all these different charts are key components of the Qs, and that's why the Qs has been the stronger of the indexes, or if you look at the ETF market in many ways, focusing in on technology, the NASDAQ 100 is what it's made up of. So again, keep that in mind, folks. So really when the QQQ breaks down, that's when we got to be scared about a major fall, okay? Other than that, you got to favor the upside right now. I happen to believe that there's going to be major volatility in this market. There's no doubt about that. And I do think that we're going to retest the lows here. And let's go back to the NASDAQ chart. I do think eventually we do retest this lows. But until we break that low right here, folks, we're not going to, and that's going to coincide with a breakdown on the Qs and Research in Motion and Apple and Baidu and Google. Though that's going to be really the thing to watch. So again, very interesting trading today. Big rally into the close with the NASDAQ closing up almost 19 points. The Dow was up as much as 270 points today. At the low, it was down 111. So that's almost a 400-point reversal at the lows, but it did happen to close up 41 points. Now, the other key I want to point out here is that finally we got the bounce on the USO or oil. Oil was up $4 today. Big move up on oil. Keep watch of this. We get over 95. We could see 100 very soon. Have a wonderful day, guys. Take care.